Hi everyone, today I'm going to be briefly breaking down 10 Canadian dividend paying stocks that are currently beating the market. The market being the S&P 500, and when I say currently beating, I mean year to date 2022 from January 1st to March 21st, which is when I'm filming this video. I'm going to be breaking down how much you would have received in dividends from Jan 1 till now and how much your portfolio would have increased if you invested $10,000 in 2021. Please note, any new investors, if you're looking to get a head start on investing, if you don't know where to start, if you're just looking for some tips and advice, I'll leave a link to my website, Canadian Finance Pro. If you sign up, you'll get this free ebook just giving you some tips and tricks for beginners. If you have any questions, please let me know. Getting right into it with my first pick, I'm going to be recommending TD Bank. I'm not going to do a deep dive of every stock. This is just a brief overview of what you would have made year to date. We're looking year to date, you would have made 2.46%. This stock pays an annual yield of 3.5%. So you would have made a quarter of this, which is, where is it? 3.5 divided by 4. You would have made 0.875% in dividends. Not much, but you're looking for this 2.46%. Moving on. BMO, I don't know why BMO is doing so much better as a bank in comparison to TD. BMO is up 8.22% year to date, just from Jan 1 to now. They also pay a similar dividend of 3.48%, and this is paid quarterly. Keeping on the same trend, I'm trying to recommend all the stocks that are similar to each other close by so we can compare. RBC, the biggest stock in Canada currently, at 200 billion, they're up 3.87%. They pay a similar dividend yield to the other Canadian banks of 3.38%. I could recommend all the other banks, but it doesn't make sense because it takes up too much of my 10 picks. So I'm just naming a few of each industry. Enbridge, they're up 14.3% at $90 billion. They pay a great dividend yield of 6.03%. Note, they also pay increasing dividends every year. So this is not stagnant. You won't be making this forever. It'll be increasing every year. 14.3% is that's a great increase year to date. If we look at Suncor is up 23.35%. They currently pay a dividend yield of 4.18. Please note for Suncor, just for an oil stock, they're only up this much because of the recent spike in oil. I don't think this is permanent. I don't think it'll stay here. If oil drops, if something happens and the war is resolved, I think this will go down. But if you did happen to buy in Jan 1, you would have made 23% so far, which is amazing just for 10 weeks of work. Moving on, a different industry. We're looking at Bell Communications. I think this is the New York Stock Exchange one, but it should be relatively similar in Canadian dollars on the TSX. 3.43% increase. They pay a dividend of 5.32%. Keeping on the same track, Rogers Communications. I should have said Rogers.to stock. Okay, this didn't work. It's still giving, this is fine. So year to date, they have increased 12.59%. And they pay a 2.91 dividend yield. If we look at TELUS, year to date, they're up 8.77%, and they pay a dividend yield quarterly of 4%. If we go into Canadian Pacific Railway, so I finally got the correct one, the TSX here. Year to date, they're up 7.08%. They pay a very small dividend yield of 0.76%. I'm not sure if I would recommend investing in this just for the dividend. They've increased a lot over the past 5 years. So obviously the dividend yield, if it doesn't increase on par with the stock, the yield is lower. But if you had invested in this in the past 5 years, not only would you have received a great dividend, but you would have gone up 158%. But let's stick with year to date. Last one on the list, Canadian National Railway. It has gone up 7.03% year to date, and they pay a modest yield of 1.75%. In the past, I would have said this covers inflation, but inflation in 2022 being 5% in Canada, at least 8.1% in the US, this is barely covering inflation. This yield would have been higher if you purchased in the past. Let's say 5 years ago, you would have received, if you had invested 5 years ago, you would have received an 80% increase. So how I pick these stocks, if you're wondering, hey, what are dividend paying stocks? What am I looking at? What are the relative size? If we go to the S&P 500 map, and then we click, this is FinViz, you click on world, let's dive just into the Canadian market. So sorry, it keeps popping up. And then we'll change the little ticker here to dividend yield. And you can see the yield of most Canadian companies. Most Canadian companies pay dividends where it's not a lot of tech. You could see the tech ones like Shopify doesn't because it's blank. But you can see the dividend yields at a static point in time, which I think this is Sunday night, like the day before I'm filming this. If you're wondering, hey, I just gave you the increases in the yields for everything beating the market, but what is the market for comparison? I use the S&P 500 as the market. I think most people do. This is the largest 500 companies in Canada. And what is the yield year to date? You would have lost 6.58%. If you invested $10,000, Gen 1, you would have lost $658. If you invested $1,000, you would have lost unrealized losses. Like, I'm not saying you have to sell now and realize these losses, but it's just giving you an example of defensive stocks. When the market goes down, defensive Canadian stocks usually outpace the market. Now let's go into the yields. If you had invested $1,000 in each Jan 1, what would be your annual yield? It is a modest 3.53%. You would have received obviously $353 a year, or these pay quarterly, $88 a quarter. If you want to reallocate your funds and remove some of the lower ones, you'd get a better yield of 4.1. You could allocate more Canadian stocks, like I believe CIBC is like 4%. And then if you do Bank of Nova Scotia, which is like 4.5%, I believe, you'd get a better yield. But just sticking with the 10 that I chose, because you don't want to do too much into banks. You already have 3 banks in this list, and then 2 energy, 3 telecommunications, and then Canadian Pacific and Canadian National Railway. If you were to have invested $1,000 in each, was that correct English? If you were to have invested, I don't think that's correct English. If you invested $10,000 in Jan 1, you would have received these yields. I took a snapshot before the market opened because the yields would constantly change. So as of Sunday night, March 20th, these would have been your increases year to date. You would have made an average 9.07%. Obviously, I would have liked to have put more in Suncor, but you don't know it's going to increase this much. So you can't pick and choose. You just invest the same amount in each. You would have made $988 unrealized. So not only would you be receiving an annual dividend of 3.53%, $353, 3.53%, but you would have made another $988. Did I do that properly? No, I did not do that properly. This should have been divided by, so this yield, yeah, so I didn't do this correctly. This would have been that. Come on now. $906. This is the ending. I did it incorrectly. That's fine. I'll leave that in the video because I'm doing this all on the fly. I kind of like rambling, doing videos off the top of my head. I ramble, the videos go on too long, but at least you see me live in action, and I'm a mess. This is why I need a script. So I think I'm going to leave it here. Just a lot of recommendations actually. Try not to do, like, I know Canadian banks are great. Try not to have your entire portfolio in Canadian banks, mainly because of you want to be a little more diversified. If you invest in the entire TSX, you'd be 30%, I believe, in financials, which is a lot compared to the US. I believe that would have been 15%. Again, a reminder, if you're interested in just a beginner's handbook, please sign up to receive my free ebook providing answers to commonly asked Canadian finance questions. If you have any questions not covered, leave a comment. Thanks for watching and tune in to the next one.